Moving countries can be one of the most exciting and most challenging things you'll ever do. And we're here to take one big worry off your plate: your taxes. At Expat Taxes, we understand the complexities of Irish tax from your perspective as an expat and tailor our advice to your needs. With decades of expertise, our team at Expat Taxes will help you navigate tax residency, cross-border taxation, reliefs and returns, and will work with your country's tax advisor to make sure your taxes are sorted. Whether you're an individual or a corporation coming from Australia, the United States, the UK, or anywhere in the world, we want to help you. So visit us at expattaxes.ie to book a consultation today, and let's make moving to Ireland easier together.
Welcome to Taxbytes for Expats, the top tax tips you want to know as an expat. The podcast is here to help answer the common queries and concerns expats have when moving to or from Ireland. Complex taxes explained simply. We'll focus on the Irish and international tax issues to be aware of to ensure you save time, money, and stress.
Hi everyone, welcome to today's episode of Taxbytes for Expats. We are joined by Mario Tenore. Mario is an Italian tax specialist. He specialises in individual taxation, and he particularly focuses on high net worth individuals, family wealth management, succession planning, and tax matters that come up for individuals in the sports industry. He has an interesting career history and has provided advisory services to sports clubs, professional athletes, footballers, race car drivers, and everyone in the middle on tax issues related to international transfers, sponsorship agreements, and image rights. He has particular interest in the flat rate tax regime in Italy. He's going to speak to us about that today. And he also has a lot of experience in international tax generally, double tax treaties, and EU tax law. You have a very illustrious career history, Mario. Thank you so much for joining us and to speak with us today. We're really glad to have you.
Thank you for inviting me.
Pleasure. I don't think that my intro really did you justice. Tell us a little bit more about your background and particularly how you came to work in tax.
Well, originally an academic. I completed my PhD study in Italy. And after a period in academia, I switched into private practice, and I'm focusing on private clients, high net worth individuals, sports people, and entertainers. It's quite fascinating today because Italy is a very attractive jurisdiction, contrary to the common perception of the Italian state. Italy offers nowadays a number of tax regimes that are favorable for individuals and are aimed at attracting foreign individuals into Italy. So, as a matter of fact, because of the boost of the tax system, we are experiencing more and more individuals, high net worth individuals, pensioners, who are moving the residents into Italy from foreign jurisdictions, including also Ireland and particularly the UK after the repeal of the UK referendum that recently occurred. We are pretty active in helping people to relocate into Italy. We offer, as a matter of fact, tax advisory services, but we also help out people on ancillary matters that sometimes, as you know, when you settle into new jurisdictions are rather important. So we try to make the relocation into Italy as smoother as possible.
Such an important thing for people to do when they decide they'd like a lifestyle in a beautiful country like Italy is to consider the opportunities and I suppose the pitfalls that might come from it from a tax perspective. Talk me through high level what tax residency means from an Italian tax perspective. When do the majority of your clients have to start thinking about being within the Italian tax net?
Well, in Italy, the rules have been recently amended. we have four criteria to assess the residency of natural persons. Contrary to the UK, for example, we do not have a split tier system. So in Italy, a person who satisfies either of the four criteria or most part of the tax period is considered Italian resident for the full tax period, which means from the 1st of January to the 31st December of the year concerned. The four criteria are respectively the registration with the local municipality, which is an administrative obligation for a person living on the Italian territory exceeding a certain amount of days. Alternatively, the habitual abode on the Italian territory is also considered a valid criterion to assess the residence of an individual. Or, third criterion, the domicile of the person that in Italy is declined as the center of personal and family interest of the person as such. Last but not least, last year, the Italian legislator introduced also the fourth criterion, which is physical presence. So if the individual is physically present on the Italian territory for a period exceeding 183 days, the individual is considered Italian tax residence. Despite of any intention, a contrary intention to be physically present in Italy, the individual is considered tax resident. As I said, what is important is that in Italy, we do not have a split tier system. So if a person arrives in the first parts of the year, for example, in March or April, the person is taking up Italian tax residence for the full tax period, which means from the 1st of January, so period prior to the move into Italy, that person is nonetheless considered Italian tax resident and taxed in Italy on the worldwide income and also on assets located abroad.
So, take for example, somebody relocates using what you said there from Ireland to Italy in April, and they remain in Italy from April to the end of the year. Under which of the criteria that you listed are they going to become tax resident? Is it you meet one test, you're satisfied? Do you have to check all four criterion to be confident? What would be the determining factor there?
The criteria are alternative, so it's sufficient that only one of them is satisfied for the person to qualify as Italian tax resident. In this case, I repeat, from the 1st of January of that year until the 31st December 2020.
And habitual residence, practically speaking, does that extend to include a holiday home?
Well, holiday home, not really, because an habitual abode means that the person should be habitually present at a specific place on the Italian territory. Habitually means that he should show, in addition to the actual stay at that place, also the intention to live at that place on a rather continuous basis, although it's not required according to this criterion a continuous presence. So the person may be present there on an intermittent basis, if we may say so. So to come to your question, having an holiday home in Italy where the person is only present for a specific period of the years during the summertime or in limited amount of time over the year would not qualify as a habitual abode according to this criteria.
Is this a self-assessment system? So for anybody listening to this who perhaps has holidayed initially, is considering spending a longer period of time, at what point do they notify the Italian authorities that they have become a tax resident, or are they required to do so?
Well, there is no tax notification from the taxpayer to the Italian tax authorities. The taxpayer, as I said, is obliged to register with the local municipality. at a certain point if the stay in Italy exceeds a certain amount of time over the year, but he is not due to notify to the Italian tax authorities that the person is taking up Italian tax residency. Clearly, as you said, it's a self-assessment exercise. So if the person considers himself or herself Italian tax resident, that person should be aware of the tax filing obligations that normally take place the year after the year of arrival. So let's say a person that arrives in January this year will file the first Italian tax return in likely November next year. Of course, the date of submission may change, so that's only, let's say, a general prediction. Interestingly, taxes in Italy are paid before the filing of the Italian tax return, generally in June. So and we have also advance payments that may be due during the year. As I said, again, there is no need to notify to the Italian tax authorities the taking up of the Italian tax resident. It's a self-assessment exercise.
So I think the interesting thing about self-assessment is the words, from an English perspective, infer that you can self-assess. That's a bit misleading because sometimes it makes people think that it's easy to do it themselves. From an Irish perspective, I would generally say to clients that our self-assessment system, as it applies to income taxes, is actually a little bit more complicated than it might initially look. And, it's routine that clients, when they try to do a DIY, particularly in a complicated international situation, get things wrong. That's completely understandable. This is complex. How easy is it for people to navigate this themselves? And if it's not, when do you want to hear from them if they are making a move or have made a move and have an Italian tax bill to consider?
It's a very good question, actually. I think it's even important to have first contact with the client before the year in which the client takes up Italian tax residence, because what I call the pre-relocation planning may be fundamental to avoid adverse consequences in the year of the relocation, and particularly in the year in which the taxpayer is considered tax residents as a first tax period. So it's recommendable to have a contact with the client before to possibly do some planning to optimize the tax position in view of the acquisition of the Italian tax residence. Generally speaking, it always happens that a person comes to me when he or she is already in Italy, and so then it's a matter of conducting the self-assessment we spoke before to understand how to consider that person for the specific tax period concerned.
Okay, that's really helpful. Thank you. So what I take from that, just to summarize what we've said so far, is residency. There's a few tests. If you meet one, you're a resident, and you also are a resident from the start of that year. So that is a reason at the very start of the discussion to contact an advisor before you become resident, so you can plan for that. And then the second point I take is, it's a self-assessment system. That doesn't mean it's simple. And you'd like to hear from clients, ideally as soon as possible, because they may need help navigating it. In terms of the good news then, because that's all a little bit about, liability. And I suppose the kind of thrust of this discussion is going to be around the flat rate tax regime. Tell somebody who knows nothing about taxes initially how the flat rate tax regime works. And then maybe we might talk about, the cohorts of people that we see benefiting from it most based on your experience.
Well, in Italy, we have two special tax regimes for foreigners relocating into Italy. We actually have a third one as well for inward expatriates. The two regimes, respectively, the flat tax regime and the tax regime for foreign pensioners relocating. The flat tax regime is a regime introduced in 2017, so it's been there already for a while. Recently, the government amended the regime and actually increased the flat tax from 100,000 euros to 200,000 euros. How does this regime work? It's a regime that is particularly favorable for high net worth individuals and particularly passive income earners. According to such a regime, the foreign income of the taxpayer is not subject to personal income tax, but foreign income is actually benefiting of the flat tax. Today, the flat tax, as I said, is equal to 200,000 euros, and the flat tax absorbs personal income tax. So, in lieu of the personal income tax otherwise applicable at progressive rates, the taxpayer is only liable to pay the flat tax in the amount of 200,000 euros, and the flat tax is flat. So, whatever amount the foreign income is, the taxpayer will ultimately pay to the Italian revenue the amount of 200,000 euros, which is an annual amount.
One question I would have is, at a high level, when is that advantageous? So my point is, how much income do you need to have to benefit from that flat tax rate as opposed to the progressive rates that would otherwise apply?
Well, that's also a good question. It's however a question to which I would reply in saying it depends, because
Often does.
in addition to the tax benefit from the point of view of personal income tax, the regime also entails other benefits in terms of tax liability. For example, the regime excludes from the application of inheritance and gift tax foreign assets, so assets located outside the Italian territory. So it depends on the ultimate objective of the person that is looking at the flat tax regime. Because clearly, if the benefit is solely a personal income tax benefit, then roughly speaking, a person that has an income of 600,000 euros might be probably interested in the flat tax regime. Generally speaking, however, the target of persons interested in the tax in the flat tax regime do have much higher income streams and much and generally big wealth. So, but as I said, the regime may also be attractive for those who want to come to Italy toward the ends of their life, because also in case of death, the flat tax regime would avoid the application of inheritance tax on the foreign assets. That's also, I think, a major advantage that this regime is entailing. The duration of the regime I've not mentioned is 15 years. That's also an important point in the planning.
Okay, that's really interesting. So is that the only regime that attracts people to move to Italy? The flat tax regime? Is there other regimes that perhaps our listeners might be, even at a high level, interested in?
No, it's not the only regime, as I said. So, in addition to the flat tax regime, we have also a regime for foreign pensioners relocating into Italy. So, those who are foreign residents and who do have pension income may relocate into Italy and opt for the application of such a regime that contrary to the flat tax regime, entails still a substitute tax, which, however, is not flat, but is equal to 7% of the income, including the pension and other foreign income. So it's a different regime that is meant to attract pensioners, particularly in the area of the south of Italy and in the small municipalities with a number of inhabitants not exceeding 20,000 inhabitants. It's a regime that entails different conditions. For example, in the case of the flat tax regime, To apply for the regime, you must qualify as a foreign resident in at least 9 of the past 10 tax periods. With respect to the regime for pensioners, period of observation is shorter, is 5 tax periods. And also the duration is different because while the flat tax regime has a maximum duration of 15 years, in the case of the pensioner tax regime, the duration is 9 years.
Well, when you say tax periods, what do you mean? Do you mean tax year?
Tax period in Italy coincides with the calendar year.
Okay.
Okay, so tax periods goes from the 1st of January to the 31st of December.
Okay, that's really interesting. So I suppose the pensioner regime is in addition to the flat tax regime and is probably more attractive to somebody who isn't necessarily in receipt of income that is, I suppose.
Substantial.
Yeah, I mean, and the definition of that can vary, but somebody who maybe is drawing on an occupational pension, a social insurance pension, is there differences or difficulties around what qualifies as a pension under the terms of the domestic legislation for the pensioner regime?
No, of course, an analysis should be conducted on the type of pension the person receives. As I said, one of the requirements of the regime is that the person receives pension income, and whether a specific income qualifies as pension income should be assessed according to the criteria elucidated by the Italian tax authorities in a number of tax rulings. Indicating when an income qualifies to be considered pension income. So this is an important element of the preliminary assessment. So on top of the assessment of the foreign residency, with respect to the pensioner tax regime, an important element to be assessed is also the type of pension income that the person receives.
They have to consider that. What advice do you give to somebody who is considering Italy as a place to relocate to? What are the things or issues or mistakes you see people making? And what advice would you give somebody who's planning to make a move?
Well, of course, as I said, the pre-relocation planning is very important. In respect of the flat tax regime in particular, there is a possibility for the taxpayer to obtain, through a preliminary ruling procedure, confirmation by the Italian tax authorities about the eligibility for the flat tax. So we always recommend our clients to pass through the ruling procedure in order to obtain confirmation of their eligibility to the regime. And interestingly, in the ruling, the taxpayer has the possibility to obtain confirmation of the foreign source of the income. Remember, the regime is only meant to cover foreign income. So the definition of source is fundamental for the application of the regime. And in addition, I have not mentioned earlier, through the ruling procedure, the taxpayer has also the possibility to avoid adverse tax consequences in case the taxpayer is considering to sell qualified shareholding, so a substantial shareholding, meaning, for example, for non-listed entity, a shareholding higher than 25% of the capital, or shareholding that entitles the taxpayer to exercise more than 20% the voting rights. So according to the rules of the flat tax regime, this sale of the substantial shareholding and the capital gain arising therefrom is not covered by the regime in the first 5 years of tax residence, but through the ruling application, the taxpayer may obtain the disapplication of this rule that has a clear anti-avoidance function. With respect to the pensioner income, there is no specific ruling procedure that the taxpayer can activate in advance. However, the ruling could be considered in cases where the qualification of the foreign income, whether the foreign income qualifies as a pension or not, is not as straightforward. So in that case, we recommend to go through the ruling procedure to obtain clarity on the nature of the income. As I said, the fundamental requirement is that the foreign income qualifies as pension according to the Italian standards.
That's really helpful. I suppose a few non-tax kind of housekeeping questions, and I completely appreciate this may not be your area of expertise. In working with the clients that you support, particularly those who might be moving for the pensioner regime, how difficult is it for a non-Italian citizen or resident to purchase a property initially? Is the process a complicated one?
No, it's not definitely a complicated one. It's a process that can be easily handled for EU citizens in particular. So it's a process we are, of course, quite familiar with, and we are able to also assist our clients. Our firm has tax and also legal department, so we often assist in these cases foreigners in the purchase of Italian real estates. So for EU citizens, is definitely not the complex, not the complex. In some cases, we have experienced issues in obtaining mortgages from Italian banks when a person moves from a foreign country, clearly with all the wealth located outside of Italy. But this is also, let's say, a surmountable issue that in many cases can easily be overcome.
Okay. Yeah, the practical issues were in consideration, those as well as the tax benefits. Mario, I suspect people listening to this and anyone who might be dreaming of a retirement or relocation to sunnier climates will have more questions, whether they're in receipt of passive income or pensioner income. How can people contact you if they want to discuss their possibility of a relocation?
They can reach me on my LinkedIn page or on my email. Professional email is mario.tenore@studiopirola.com. I'll be happy to respond to questions of those who might be interested to relocate to a country that is a sunny one, not in all the regions, but in many regions, a sunny country with lots of history, lots of architectural beauties, and definitely a great quality of life.
I agree. I agree. And for any of our clients who we've worked with who've made a move, generally it tends to be one that they very happy about. So getting the tax piece in order is definitely wise. Thank you so much, Mario, for taking the time to speak with us. I think we covered a lot. Again, I think anybody making a move always benefits from bespoke tax advice, but this has been really useful as giving an overview of the issues. And I'm sure many people will reach out to you. Your email will be in the show notes. Thank you so much for taking the time to join us today.
It's been a great pleasure. And again, many thanks to you for inviting me, Stefan.
Thanks for listening to Taxbytes for Expats. Please do leave a rating or review wherever you listen to your podcast. And as always, remember to take professional tax advice specific to your personal circumstances before acting or refraining from action in connection with the matters dealt with in this series. The material in this podcast is intended to give general guidance only.